For years, Tesla reigned supreme in China, capturing the imagination of consumers and investors alike. Its Shanghai Gigafactory stood as a monumental symbol of its dominance in the world's largest electric vehicle market, producing thousands of cars each month. China was Tesla's golden goose, delivering record profits and capturing significant market share, making it a crucial part of Tesla's global strategy. But now, that narrative is shifting. The once bustling showrooms are seeing fewer visitors, and the excitement seems to be waning. Recent data reveals a sharp downturn in Tesla's performance in China, raising tough questions about its future in this critical market. The once unshakable dominance is under threat as local competitors, armed with innovative technologies and competitive pricing, are gaining ground. Tesla's brand, once synonymous with cutting-edge innovation and luxury, is losing some of its magic as local competitors surge with new models and features. The latest sales figures suggest Chinese consumers are rethinking their loyalty, exploring other options that better meet their needs and preferences. This isn't just about one company. It's a glimpse into the future of the global EV market, where competition is fierce and consumer preferences are rapidly evolving. Fierce competition, evolving tastes, and economic headwinds are reshaping the landscape, making it clear that no company can rest on its laurels. The days of easy growth and single-player dominance may be over, as the market becomes more fragmented and competitive. Tesla now faces a new reality: adapt or risk being left behind. The company must innovate and strategize to maintain its position. The golden goose is feeling the strain, and how Tesla responds will determine its future in the ever-evolving electric vehicle market. The numbers tell a sobering story. October 2025 marked a turning point for Tesla in China. The company sold just 26,006 vehicles, the lowest monthly figure it's seen in 3 years. For a brand that once set the pace for electric vehicles in the world's largest auto market, this is a dramatic reversal. The sales report, with October's numbers highlighted in red, signals more than just a bad month. It's a warning sign that can't be ignored. This isn't a minor setback. Tesla's sales in China dropped by a staggering 35.8% compared to the same month last year. Even more alarming, the decline from the previous month was sharp and unexpected, catching analysts and investors off guard. The downward trend is clear, and the numbers are impossible to spin in a positive light. Market share tells an even more troubling story. In just 1 month, Tesla's share of the Chinese EV market plummeted to 3.2%, down from 8.7% in September. That's not just a dip, it's a free fall, and it signals that Tesla is losing its grip on a market it once dominated. Losing more than half its market share in a single month is a major blow to Tesla's ambitions in China. For executives and shareholders, this is more than a financial setback. It's a crisis that demands urgent attention and a new strategy. This isn't just a seasonal dip or a blip on the radar. The empty showrooms and deserted dealership lots point to deeper, systemic issues. Tesla is facing challenges that go beyond temporary market fluctuations. Local competitors are stepping up their game, offering more choices, better prices, and features tailored to Chinese consumers. Brands like BYD, NIO, and XPeng are capturing more buyers, squeezing Tesla from all sides and making it harder for the American giant to stand out. The era when Tesla was the default premium EV in China is fading fast. Once seen as the undisputed leader, Tesla now finds itself surrounded by a new generation of innovative, aggressive competitors. These figures are a wake-up call. For Tesla, the message is clear. The company is no longer untouchable. It's now fighting to defend its territory in a market that's evolving at breakneck speed. The competitive landscape has fundamentally shifted. Chinese automakers are no longer playing catch-up. They're setting the pace, and Tesla must adapt or risk falling further behind. Growth, once taken for granted, is now uncertain. The sight of empty production lines and closed showrooms is a stark reminder that success in China is never guaranteed, even for industry giants. The numbers from October are more than just statistics. They're the first major tremor in what could become a seismic shift for Tesla in China. The road ahead will be challenging, and how Tesla responds now will shape its future in the world's most important EV market. The contrast is stark. Just a month earlier, in September, Tesla sold over 71,500 vehicles in China. That surge was fueled by the launch of the Model Y/L, a variant tailored for Chinese families. But the October collapse shows the boost was short-lived, driven by early adopters and pre-orders. Once the backlog cleared, sales plummeted, exposing weak underlying demand. Can Tesla rely on new variants for lasting growth? The data says no. The roller coaster from September's peak to October's trough highlights a flaw in Tesla's strategy. New models create buzz, but don't solve deeper demand issues. Sustained growth requires more than a temporary sugar rush. Tesla is no longer the only game in town. Chinese brands like BYD, NIO, XPeng, and Li Auto have become formidable rivals. They know local tastes, move fast, and offer high-tech features at lower prices. From battery swapping to luxury interiors, these companies are innovating rapidly. The market is now fragmented. Tesla is just one of many high-tech choices. Local competition is the biggest factor behind Tesla's struggles. The fight for EV supremacy in China is more intense than ever. Enter Xiaomi, a tech giant turned EV powerhouse. In October, Xiaomi sold nearly 49,000 vehicles, challenging Tesla head-on. Its SU7 sedan and YU7 SUV directly target Tesla's core models, but with Xiaomi's signature software ecosystem and competitive pricing. Despite early safety concerns, Xiaomi's brand power and tech integration are winning over buyers. Xiaomi treats the car as a smart device, leveraging its expertise in consumer electronics. This is a new kind of threat, one Tesla can't ignore. Xiaomi's instant success proves brand loyalty is fragile. The EV battlefield just got a powerful new contender. Tesla's troubles aren't just about competition. They're tied to China's economic slowdown. Consumer confidence is down, and big purchases like cars are being delayed. The government has scaled back EV subsidies, raising real-world costs for buyers. With less support, price-sensitive consumers are turning to cheaper local brands. Foreign brands like Tesla feel the pinch most in the premium segment. The combination of nervous consumers and fewer incentives is a tough headwind. Tesla isn't just fighting rivals, it's battling economic caution. The market is tougher for everyone, but especially for premium imports. Amid weak local sales, there's a twist. Exports from Tesla's Shanghai factory hit a 2-year high in October. Over 35,000 China-made Teslas were shipped overseas, offsetting some domestic weakness. Gigafactory Shanghai is now a global export hub, supplying Europe, Asia, and beyond. This flexibility helps Tesla keep production high and costs down. But exports are a temporary buffer, not a long-term fix. China remains the world's largest EV market. Losing ground here is a strategic blow. The export surge shows operational strength, but the real challenge is winning back Chinese buyers. The core issue remains demand at home is shrinking. Tesla's sales slump isn't limited to China. In September, the company saw sharp declines in key European markets like Germany and the Nordics. European automakers are ramping up their EV offerings, intensifying competition. Economic uncertainty and inflation are making buyers more cautious. The pattern is clear. Tesla's challenges are global, not just regional. Its once unique lineup now faces a flood of new rivals. The company's competitive edge is eroding worldwide. Tesla's recent slump in China marks a significant turning point for the electric vehicle giant. Once seen as the undisputed leader in the world's largest EV market, Tesla now faces a new reality. One where competition is fierce, and its dominance is no longer guaranteed. The company can no longer take its dominance for granted. Chinese automakers like BYD, NIO, and Xiaomi are not just catching up, they're setting new standards in technology, affordability, and consumer appeal. The streets of China are now filled with a dazzling array of electric vehicles, each vying for attention and market share. To survive and thrive, Tesla must innovate faster than ever before. It needs to adapt its vehicles to local tastes, invest in cutting-edge features, and compete aggressively on price. This means rethinking everything from design to manufacturing, and even how it connects with customers in a rapidly evolving market. For consumers, this fierce competition is a win. It means more choices than ever before, better technology packed into every new model, and lower prices as brands battle for loyalty. The EV revolution is accelerating, and buyers are reaping the benefits. For investors, however, the landscape is more uncertain. Tesla's once unstoppable growth story is facing its toughest test yet, and the company's ability to maintain its edge is under intense scrutiny. Market volatility and shifting consumer preferences add to the pressure. The coming months will be critical. They will reveal whether Tesla's recent setbacks are just temporary bumps in the road, or signs of a more lasting trend that could reshape the company's future in China and beyond. China's EV market has become a true battleground, where no single brand can claim the spotlight for long. The days of a one-brand show are over, replaced by a dynamic, fast-moving contest for leadership. The lessons learned here, about relentless innovation, agility in the face of change, and the importance of local adaptation, will echo far beyond China. They will shape the strategies of automakers worldwide and define the next chapter in the global EV race. Tesla's journey in China is far from over, but the climb ahead is steeper and more challenging than ever before. The company must prove it can rise to meet these new demands. How Tesla responds in this pivotal moment will not only define its own future, but could also set the course for the entire electric vehicle industry worldwide.